What is going on, guys? Welcome back to another brand new video. Today we're going to talk about something that I've already talked about in the past, and there's a video actually that I'll show you guys just in a bit before I start the video. I've already done a video, but that was when I was trading forex, and so this time I want to do a video on crypto, and I want to show you guys the similarities in the market, and so you guys can understand that nothing in this market happens by chance. Nothing in this market is a coincidence. Everything just repeats itself. It's a pattern. It's an algorithm that repeats itself. It's just people need to train their eyes in a manner that they can, whenever they're looking at a market, they can sort of tell that what is going to happen, what is going to repeat itself, and when and where the areas where the market tends to repeat these patterns and this algorithm, right? So before we start the video, there will be a link in the description and in the first comment below, which will take you to Binance.com, which is the world's biggest crypto exchange. If you like to buy and sell or trade crypto, you can do so, and you can use my referral link to sign up, which will give you 20% discount on every transaction fee that you have to pay. So please go ahead and take advantage of that. So if you have not signed up on Binance.com, you can do so, and you can use my referral link, which will give you 20% discount on every transaction fee. So today I want to talk about patterns, right? And these patterns, for the past 2 or 3 years, I have seen these patterns repeat themselves so many times that it's just hard to miss them, right? At this point, I just look at the market and I can tell what is happening. And these patterns are the ones that have given me the most returns. I do want to say that these patterns are the ones that I trade with more confidence. And so one other thing that I would like to mention here is that people always seem to look for the perfect entry, the best entry. And let me be the one to tell you that there is no such thing as the perfect entry. There is, however, a concept called risk management. And you can minimize your losses and maximize your profits based on your risk management. So there are a couple of things that you should look for, and I'm not going to talk about risk management in this video. I'm just going to talk about how you can minimize your losses and maximize your profits just looking at these patterns and being patient. So let's just go ahead and jump into the video. Okay, so like I said, there is a video that I've already done on this topic, and it is this one: institutional patterns designed to make you lose. You should definitely check this video out. There's a couple of examples I did in this video, but of course now it's all blurred out because I don't trade forex anymore. Definitely go ahead and check this video out. It contains extra examples that you can study. Okay, so starting with the first example, I've already talked about this in my previous video, so I'm just going to delete this. I'm going to draw an image for you guys so you guys know what we are going to be looking for. So in a downtrend, we are going to be looking for a pattern that looks like a W. Okay, first of all. Secondly, these patterns that I'm going to talk about today happen mostly at a swing high in a selling scenario and at a swing low in a buying scenario. So first of all, we are going to talk about the buying scenario. And the buying scenario looks something like this. So we are in a downtrend, market is continuing, and then market slows down. And then market will start accumulating and then do something like this and then reverse. Now, when the market does something like this, this is the W that I was talking about. This whole pattern right here. Do you see how it looks like a W? Right? But before creating this W, it will create either a swing low or swing low, just like this, or it will create a lot of liquidity like this. It will create a series of equal lows and then dip down a little bit, grab all this liquidity, and then it will reverse. Now, we will not consider entering on this at this dip unless it goes ahead and creates new market structure. So it breaks all the previous highs, creates new market high, and then comes back below. And then at the dip is where we are going to enter. This is in a selling scenario. How is it going to look like in a buying scenario? Completely the opposite, right? Upside down. So it's going to look like an M shape or M letter. So the market is in an uptrend, continuous uptrend, and then it will slow down, start creating equal highs or liquidity, and then boom, it will spike up for just a little bit, and then it will dip down or reverse. sorry about that. It will reverse, and this is where we are going to enter for a sell whenever the market comes back. So you guys might have guessed it by now. Sometimes it will just create a swing high, spike up, and then dip down. Break the previous market structure, will create new market low, and then come back to that swing high where we will look for a selling trade. So basically what we are going to be looking for, swing highs and swing lows. You can also call these patterns double tops or double bottoms. It is basically happening. These patterns tend to repeat themselves at swing highs and swing lows. So now we are going to take a look at some of these examples, and let's see if you guys can spot them out before me or not. So, okay, so the very first example we're going to take a look at is a double top or an M shape. If you guys remember, like I said in the beginning of the video, these patterns happen at swing highs or swing lows, or at the end of an uptrend or at the end of a downtrend. So an M shape or a double top is supposed to happen at the top or at the end of an uptrend. So if you guys can see, if you guys take a look over here, we have a small uptrend. It's not a big one, it's not a major uptrend, but you guys can see market was creating new highs, new lows, then new highs, new lows, new highs, new lows. And so you guys can see that the market, after a very impulsive move, a very strong uptrend, a very strong buying pressure, market started slowing down. It started creating equal highs, right? And this is liquidity. Liquidity is basically money in the form of pending orders, right? People are going to be, maybe people have pending orders over here, that pending buy limits, right? So for example, when the market breaks up above this resistance, their buying orders or buying limits are going to be activated. So they are going to be in a buying position. So the market is, in their mind, the market is supposed to continue like this. But what happens is the market spikes up just once, right? Grabs the liquidity above this resistance and then reverses. This is the pattern that I'm talking about. This is the one that is happening all the time in all kinds of markets, and I'll show you guys examples on one or two other pairs as well. But if you guys focus over here, the market, once it does this, once it creates a double top, or once it does the liquidity grab, you can see that when it comes back to that last selling pressure over here, it never goes above that, it never breaks above this, and it just continues lower. This is supposed to happen in an uptrend, right? Or in a double top or an M shape. The market is supposed to respect that. If it breaks above this, then this is invalid. It's not a valid setup. What you guys can do over here as well, one more thing, is you guys can add OBV indicator, on balance of volume, which is a very good extra confirmation to have if you guys are familiar with divergence. I don't know. I did a video on divergence. I don't know if it's still up on my channel or not. Let me see. Okay, so I didn't re-upload, or I didn't make the divergence video public. I don't know why. Probably something in there that I cannot show relating to forex. It's okay. I'll make another one on using crypto pairs, and I'll explain it again. But divergence is a very good confirmation to have. For example, there I can assure you guys there is divergence over here. So if I go to indicators and I add OBV, you guys can see that the market was creating equal highs over here, equal or higher highs, but over here, from this peak to this peak, or from this wick to this wick, it created a lower high. And so when the market does that, when the market creates equal or higher highs, but the indicator is creating lower highs, that means that it is a bearish regular, right? And this means that a trend reversal is on its way. So just like that, you can use OBV as an extra confirmation. It comes in handy. But now I'm going to show you guys another example where the same thing is happening, trend reversal, but in a downtrend. So for a downtrend example, one of the recent videos, I think the latest one, this one, the institutional concepts Bitcoin trade, this one was the latest example where the market grabbed all this liquidity. Now, it was not a clear-cut W shape, but if you go to higher time frames, you can see it better. So you guys can see this was a downtrend. Market started slowing down, started creating liquidity, then did this move, which is a W, right? Not a perfect one, but the one where it dips down just a teeny tiny bit, just that extra bit, and then comes up and creates new market structure. And by new market structure, I mean it started creating new higher highs, new higher lows. And so this one was a really good trade, a really good recent example. But let me show you guys some in the past as well. So one thing that I've realized in all these months that I've been trading crypto is that sometimes trading swing highs and swing lows, not the perfect W shape or the M shape is gonna form right at the end of the top of a swing high or at the bottom at the low of a swing low. Sometimes what's going to happen is that the market is in a downtrend. It does this, creates a very steep, very low swing low, and then it never goes beyond that. It never goes under that, never breaks the first leg, and then creates new market structure. So when this happens, right? When this happens, or let me draw this in a much clearer way. So in a downtrend, right? This happens. Right then it's going to break the first impulsive move. It is going to break the market structure, come back to that swing low. So when it comes back to that swing low, it is going to reverse from here. So this is the first W shape that I talked about was like this, right? Where the second leg goes below the first leg. In this case, that's not going to happen. The first leg is going to be respected. Sorry, actually, the first leg, we have to break the previous market structure. So the first leg is going to be respected. And this happens more in crypto. I didn't notice this in other in forex markets as much as I've noticed this in crypto. As you guys can see over here, the market took a very huge fall, very sudden fall right here in a downtrend, and then the first leg was never broken. Instead, it broke all this previous market structure, created new higher highs, right? Broke these highs over here, and then came back to that first leg. Now remember, when this happens, the market should come back very fast. If it takes a very long time, chances are it's not going to be respected. The first leg is not going to be respected that much, and the market might not reverse from here. But if it comes back in a decent time, in a shorter amount of time, chances, very high chances, this first leg is going to be respected. And most of my crypto trades have been in this pattern, and most of my crypto trades have been buys. They have been buying trades, and then I just sell whenever they go to the next point of liquidity, or I just hold them over time. But since I got into the crypto market when the crypto market was experiencing a very strong buying bull market, so most of my trades were naturally just buys, right? And this was the complete opposite of what I used to be. When I was a forex trader, I used to be a better seller. Means I could spot setups in the market where there were more selling opportunities. So whenever it came to buying, my trades were not that accurate. But when it came to selling, my trades were very, very solid. And of course, this was back in forex. Crypto, however, taught me how to be a better buyer, how to buy cheap, or how to buy at a discount, how to buy at a lower price. And of course, naturally, my buying trades have been more than my selling trades. And so I want to show you guys just one more example over here. On XRP, same thing, 1 hour time frame. The market was falling, took a very strong fall over here, and then you guys can see that this leg was created. And then now over here, the problem is let me delete this. Over here, you have to be very accurate. You have to zoom in. You have to look at it from a closer distance. So when it created the first leg, it never broke the previous highs. It never broke this little swing high or this one before it could respect or retest the first leg. Instead, it came down, broke the previous highs over here, right? And then this is where the last selling pressure was, and it got retested over here. Let me draw a horizontal line for you guys to be more accurate right here. So it respected the first leg, as you guys can see over here. And this is not too late. This is, like I said, it should when the market is going to respect the first leg, it should come back a bit quicker, right? Or in a decent amount of time. And this was not that long. The only downfall to this trade would have been that, now of course I didn't buy over here. I have bought XRP at a much lower price, right? I technically bought it for free. I bought it way back. So, but if I would have entered, now the problem here is that I wouldn't have entered I wouldn't have invested a bigger amount, right? That I normally do, because over here, it has a very strong potential of going down, and that is a very big of a stop loss for my trading style, right? So let's see. So for example, I was going to set this as my target or my take profit. You guys can see this is not even a 2-to-1 risk to reward, which I normally follow, right? The way I trade, my take profit at least has to be double than what my stop loss has to be. So over here, that is the only downside. Other than that, this was still a very good example, a very good trade. The market was falling, created the first leg, broke the previous market structure, retested the first leg and even the last selling pressure over here, and then just reversed. So if you guys, now what I want you guys to do is, after you guys have watched this video, forex or crypto, whatever you trade, go back to your charts, take a look, no matter what time frame. The higher the time frame, of course, the better. So I like to stick to the 1 hour time frame. I think my whole life, my whole trading career, I have stuck to the 1 hour time frame more than any other time frame. But I want you guys to go through every single pair, even indices, metals, right, whatever you trade, and I want you guys to spot these patterns. And I want you guys to see, you guys are probably going to be shocked or amazed at how many times the same patterns repeat themselves at key levels where the market starts slowing down at the end of an uptrend, at the end of a downtrend. The market starts slowing down, the market starts creating liquidity, and then grabs that liquidity, reverses, creates new market structure, comes back, retests that liquidity grab, and then reverses. Or the market will create a double top, double bottom, and sometimes the first leg is going to respect it. Sometimes the second leg, where the liquidity grab happens, is going to respect it. But the point is that these patterns happen so many times, and at so many different key levels where the price has recently done something crazy. So I want you guys to spot these patterns, these shapes. And I want you guys to just be able to look at the market right now and be able to spot any of these patterns, right? These patterns should become a muscle memory for you guys. Trust me, once you guys have grasped these simple concepts where the market reverses at the end of a top or a bottom of a downtrend and creates these patterns at the top or bottom, trust me, trading is going to become so much easier for you guys. And so that's it. Please let me know in the comments if you guys have any other questions. I'd be more than happy to answer them. And that's it. I'll see you guys in the next video. Peace.